Hey everyone, this is Nick with Us versus Herd. I want to do a quick video today about how making money is going to be easier or start getting easier on Robinhood. Currently, the only way to make money on Robinhood is buying and selling stock, and you can't short stock. You can't do any of that. You can only, basically buy low, sell high. Right now we're in a bull market, so it's very easy. So I just want to go over some things that you can use that Robinhood's going to be implementing here. One thing is the web platform. So before, you'd only be able to check your holdings or buy and sell on your mobile device, Android, iPhone. Robinhood Web is now available. Not available. I think they're letting it out to who's ever's on their list. So now, like I said, right now they're just allowing. This is what their order types are allowing. Purchasing stock, and right here, as you can see here on their, this is updated one day ago, so you know it's current. They don't support short selling. What that means is you're betting, you're able to bet on the stock going down. Right now you can only buy shares, and and the stock will move up, and then you can sell it. You can't actually make moves if let's say a company issues bad news. You can't take advantage of that. You're basically going to have to wait till it gets down to the bottom, then you can buy it, and hopefully it goes back up again. So for all you penny stock traders, you're already at a disadvantage, and to be honest, I wouldn't short penny stock. The other day, Robinhood just announced options trading. Now, if you're not sure what options are, you're going to have to get familiar with that. I'll go over a few quick things here on the Thinkorswim platform, because Robinhood's isn't out yet. You can sign up for early access if you like. The one thing I do say, I think they still need to get better charting or allow different kind of charts instead of this line. I'd like candles and stuff like that. But they're the first ones to do commission-free stock trading, and they're going to be the first ones to do commission-free options trading, and they're also going to have all the tiers too. So not just so if you're not familiar with options, it goes in tiers with levels of permission. There's like tier 1, which just allows you to buy calls and puts. Tier 2 will allow you to do like cover calls, and then tier 3 will allow you to sell naked. And if you don't know what that means, we have some other videos regarding this, and you'll be able to take advantage of those. And basically, buying calls. When you buy calls, you want the stock to go up. If you buy puts, you want the stock to go down. So for the first time in Robinhood history, you'll be able to take advantage of a stock tanking or a stock going down, or if you think the chart's too extended to the upside, you can bet against it and short it through using puts. And I'll show you a quick, if you're not familiar. As you can see, let's go back here. There's this kind of going to be looking. It's what you call an options chain. They have the options price here. They're moving kind of quick here, and I think you can pause that. But I'll show you quickly what that means. Here's an options chain. For instance, I have Apple here today, and we can, it's separated by dates. These are dates of expiration. And then on the side here, we have, up here you see we have calls, and then we have puts. Like I said, calls, you want to go up. Puts, you want to go down. This is just a really quick crash course. A contract means you're entitled to purchase 100 shares. So if I buy this contract right here at the 170, in the middle here is the strike price, so you can see strike. So if I buy one contract here at 170, I will have the right to purchase 100 shares of stock of Apple at the $1.70 price. So it doesn't matter if it goes up to 200. It doesn't matter if it goes up to 190. I can still get these shares for 170. But what most people do, instead of trying to get that, they flip the contract prices. As you can see here, they're worth $3.70. But because one contract equals 100 shares, this is actually $370. So you always times 100. So this one, $5.35. That's actually $535, and so on. So what happens as you can see, some of these are yellow and these are white. The ones that are yellow means they're in the money. So as the calls, these are the calls. The bottom ones are in the money, and the top ones are out of the money, because as it goes up this way, as the stock increases in price, these will become in the money. And then the puts on is kind of reversed. So this is if you want to go on the downside. So the downside, this will start moving up this way. The yellow will start increasing this way, and those will be in the money when they go down. So as you can see, it's a lot more complicated than just buying and selling stock, but I think that it's much needed. I think this is going to be great for Robinhood, and I've been trading options for a long time. I think it's going to be great, and I can't wait to see what it does to the liquidity of the market. I know that people are going to treat these like penny stocks and get burned. I mean, they do move a lot like penny stocks. Like these options, you can make 100%, 1,000%. You can, it gets pretty crazy with big moves. So, on options, you can pretty frequently make 50%, 100%, 25%, and that's what people that trade penny stocks do. Except for what I like them better is because you're trading, more well-known companies, like you're trading Apple, or you're trading Amazon, or you're trading Best Buy, or some other big companies. Otherwise, when you trade penny stocks, you're just trading so-and-so solar or whatever, and hope they land a contract with another company, or these you're kind of familiar with, and you kind of can understand how they move, and you can actually buy or trade options in companies that you're familiar with, like like Netflix, for instance. Or, a lot of people, or Facebook, or any of these things. There's a lot of factors that will go into why you should purchase one over the other, or what you can afford, or, the chart, and, blah, blah, blah. But this video, I just want to say, for the first time ever, you'll be able to make money when stock goes down in Robinhood. And I think it's actually safer that they don't let you short stock, and they let you buy puts. Because if you buy a put right here, the worst that will happen is it will go to zero. When you short stock, the risk is unlimited until you get the margin call, obviously. So they'll eventually close you out when you reach your thresholds there. But I want to know what you guys think about the options trading and the different features coming to Robinhood. Are you going to be sticking with your normal platform? I'm on Thinkorswim right now, TD Ameritrade. I'm actually starting to trade more on Tastyworks, because they actually put they actually got a mobile app out now, so we can trade on the go. But are you going to be sticking with Robinhood? Are you going to be moving more assets there, taking advantage of the trades, commission-free trades? I know that their platform sometimes gets a little in high volume days or high stress days where there's a lot of volume to the downside or to the upside. They have some issues. I've had some issues with them recently purchasing shares of Square when that was high volume. So let me know what you guys think. Leave a comment below, like the video, and subscribe.